Hey everyone, welcome back to another video. So last week, we know that the market had an absolutely insane move to the upside, probably one of the biggest gamma squeezes we might have ever seen. So the week closed at roughly a 2.5 standard deviation move to the upside, well outside of the expected move, obviously. And SPX rallied nearly 500 points in 5 days from low to high. So this was the day of the FOMC. That's kind of where we sold off at the end of the day. We were just in the low 7300s. And 5 days later, we nearly tagged 7,800. So I think the total move was actually like 480 points or something, but just about 500 points in 5 days. And I think near the high here on Wednesday, we were looking at a nearly 3 standard deviation move to the upside. Just absolute insanity in the market right now. So in last week's video, I even briefly talked about, previous explosive moves to the upside that we saw in April and May, kind of over here. Um, this was a really crazy 2 or 3 week period, and it was nonstop. It just kept going and going and going, and it makes me kind of wonder: is that what the market has just kind of unlocked right now? So, um, I think a lot of people thought July was going to be bullish. Obviously, that wasn't the case. It seems that August has kind of taken over, because this month obviously has been absolutely insane to the upside. And it's hard to even analyze the market when it's trading in these conditions. When we're just, blowing through the expected move, blowing through some serious resistance level, previous all-time highs. There's no rationality or logic in the market when it's just kind of moving, 500 points in 5 days, for example. That's essentially a crash to the upside. If we were sitting here today and SPX was trading at 6,800, in 1 week down from 7,300, we'd be talking about, one of the craziest down moves ever, blah blah blah, right? That would be basically a crash. So at this point, I think the market is ignoring all logic, all rationality. I don't know how much of these levels even matter at this point. Um, so we're just kind of going to discuss the market from a psychology standpoint or from a perspective standpoint, like where are we going, rather than what are the levels, what's the technicals telling us. That the charts really don't have much to say, I think, when the market's going crazy like this. So I'm not saying to go bullish at 7,800 on SPX, but after a move like that, especially given how fast and furious we came up, you got to believe that there's people ready to buy the dip. There have to be people who completely missed this up move. I know I did. I didn't expect it. I didn't think it would keep going. And I think there's a lot of people in the same boat. That as soon as we get a little bit of a dip, maybe we retest some of these previous highs. If we even get that far, even that's 150 points away now. But you got to believe that people are ready to buy the next dip, and that was kind of the mindset here. From a market psychology standpoint, when we bottomed here in March, April and May were just nothing but up, up and up, and even the smallest dips were bought, and we just kept pushing higher and higher. So just a lot to think about. We're supposed to be recapping the previous week in this portion of the video, but I think there's a lot of similarities between last week and what we saw out of the gate in March. So definitely a crazy week, and I think it's going to continue for a while. All right, so heading into this week, the expected move is about 100 points. So last week we were looking at about 111 points, so it's come down. It has continued to come down over the last few weeks, and VIX also closed below 15 this week. 100 points seems incredibly small considering, we just moved 500 points last week, just about. But in any case, the upper end of the expected move comes in at around 78.57, and the lower end is 76.57. So interesting note is the lower end of the expected move is actually above the previous all-time high, which was 76.20. So this really shows the upside bias in the market that, at most, even if we tag the lower end of the expected move, we still don't even retest the previous high. We would actually have to breach the expected move by, 1.25 or something in standard deviations to actually even retest that level. So the market is putting that retest of 76.20 at an incredibly small probability. Um, and of course, the new all-time high, or the upper end of the expected move continues to push new all-time highs. Breaking that 7,800 level, starting to push towards maybe even 7,900. So we're almost actually going off of the top of the chart here. So it's getting really crazy on how far up we've continued to go. So small expected move, implied volatility is dying out. As I said, VIX is under 15. Most of the big earnings are behind us. Nvidia is still not for a couple of weeks, and Micron might be more than a month away. So those are kind of like the two big ones that are still lingering out there. But yeah, last week was kind of the end of the earnings cycle, if you will. So a little bit, a couple of names here and there scattered, but no big market movers until Nvidia at the end of the month. So we're kind of hitting the stride where we're in the middle of the month. A lot of the major economic data is also kind of behind us. We still have CPI and PPI coming this week, but honestly, at this point, I'm not even sure how much that matters, especially when the market is kind of in this runaway train mode. So 100 points, we'll still watch these levels: 78.57, 76.57. They'll still be important to watch, but I don't know if we even get down here and break this. We'll see if it's just kind of a slow grind up towards this 78.57 level. I have a feeling we might try to retest this 77.93 at some point early this week. So yeah, keep an eye out on these levels, and we'll see what happens. All right, and then since I mentioned implied volatility and the VIX, just want to do a quick recap here as well. So obviously, with the market completely exploding to the upside, VIX has imploded and is now sitting at some of the lowest points we have seen since January. So we decisively closed below the 15 level, and it was nothing but down, down, down all week. Well, I shouldn't say down, down, down all week, actually. Monday, Tuesday, VIX was actually kind of slightly elevated, but because there was volatility in the market, right? We moved 500 points in 5 days. Monday, Tuesday were both triple digit up days on SPX. So that is volatility. And we did see VIX slightly rise with SPX, early in the week, but obviously, later in the week as SPX tried to kind of just chop around and grind higher, VIX completely collapsed. And now we're at the lowest levels we've seen almost all year. Whether we make it to these lows or not is hard to say. If the market keeps continuing to grind higher towards 7,900, maybe 8,000, maybe VIX gets down here, but for the time being, it's definitely a significant breach of the 15 level, a significant breach to almost the lows of the year. So I think volatility has definitely exited the market. It doesn't tend to stay down here too long. That's the only thing I want to point out. Whether it immediately pops to the upside or not, that remains to be seen. But we're definitely at, I would say, dangerously low levels on the VIX. At some point, it will rise again, and that volatility will return to the marketplace. But for right now, it seems completely dead in the water. So as always, keep an eye out on it. VIX is always important, but right now it's not really telling us much other than SPX may continue rising. All right, real quick, I also want to talk about the NASDAQ 100 real quick, or NDX. So NDX is obviously nowhere near its all-time highs, even though we saw SPX, clearly breach that level and push to new all-time highs by almost 200 points. So NASDAQ not even close at this point, and we actually haven't even broken this key 30,000 level. Just, from a psychological standpoint, that's important. And we got very close on Wednesday, um, but it wasn't quite enough, and we might be back on the upswing, but 30,000 is a big psychological level to watch for on Nasdaq. I think if it breaks, we could continue to the upside. The only difference between the last rally and this one is Nasdaq's behavior. So earlier in the video when we were talking about March and April and May, when we were looking at this up move, the important thing to note was this up move was primarily led by Nasdaq. Nasdaq was outperforming SPX by a long shot. It wasn't even close. I think at one point Nasdaq was up like 30% from the lows, and SPX was somewhere in the teens. So almost a 2-to-1 ratio. This time around, SPX is the clear winner, and Nasdaq is severely lagging behind. Now, why that's important is generally, Nasdaq tends to be the market leader. The big tech stocks, the big mega caps, all the trillion-dollar companies, they're mostly all in the Nasdaq. and they're kind of the ones that lead the way. And that hasn't been the case for this last week. As crazy of a move as this was, even for Nasdaq, this was insane. We went from 27,000 to almost 30,000, but Nasdaq is still lagging behind. If we do break 30,000, 30,500, and of course the high is at 3762, kind of become the next targets. So if anything, to watch for this week will be the Nasdaq. If Nasdaq does break out and Nasdaq starts to lead the SPX on a daily net change um, basis, and also just level basis, where Nasdaq starts taking out these levels, then I think that's going to give a lot of fuel to SPX to continue. If Nasdaq somehow rejects this level, or maybe has a fake breakout and then it comes right back down, I think that's going to give an indication on what SPX does next as well. So watch Nasdaq. It's going to be really important next week. And yeah, we'll see what happens there. All right, and that does it for this week's video. Thanks again for tuning in and watching along. Not much on the docket this week. Like I said, earnings wise, I think, ASTS, CoreWeave, NBIS, and Cisco might kind of be the big ones that I watch for. But that's really it. No big real market movers. But those hyperscalers and ASTS always tend to move a lot. So still some fun opportunities for trades out there. And yeah, we'll see what happens. Maybe the craziness continues in the marketplace. But regardless, good luck on your trades this week, everybody. And we'll see you in the next one. Thanks.